All right, guys and gals, so welcome to Psycho Traders Swing Trading Seminar. My name is Eric, and on behalf of myself and the rest of the team, want to thank you guys for being here with us, and we truly hope that you walk away today with some value, all right? And so what we're going to do is that we're going to go over, Psycho Traders swing trading system that we've developed here that we believe is simple enough that we've boiled it down to a formula that you can apply from trade to trade, from setup to setup across, a wide range of time frame. There's a PDF document that we have on our website that you can download and follow along the presentation. So that's all for your convenience, guys, and we encourage that you do it, okay? So you would go to our main homepage. This is what you will find, psychotrader.com. You will go up here to the right corner, top right corner. You will either log in, create an account, or just go directly to the dashboard. This is what you will see. You go here to the left where it says Daily Recap and More. You go to the Resources tab. And then over here, you will find it, Psycho's Ultimate Swing Trading Guide. You can open it in a new tab or download it. This is what it's going to look like if you open it in a new tab. This is just the cover page with the 6 main steps of the system, and the rest of the document is also in there. Okay, so to set your expectations straight from the beginning, guys, this is going to be about a 2-hour presentation. It's going to be divided into sections that you're going to be able to stop and then take a break and come back to. Okay, so I'm going to give you a quick general overview of the swing trading system. Then we're going to go through the 6 steps of the system, and this is going to be the most dense part of the presentation. Okay, specifically step number 1, when we're going to talk about identifying the set. Okay, then we're going to go through examples. We're going to go through lots of examples. We're going to look at past examples. We're going to look at real examples of real trades that we actually took with our members. And then we're going to look at current examples. Some of you are already thinking, okay, Eric, it's very well that you're able to show us a chart and then show us in the past what the setup was, because you can already see that it happened. What does it look like if I were looking for the setup today and I wanted to take the trade today, and the chart essentially has not developed and we're looking at a blank going into the future? All right, we're going to look at those examples as well. You guys are going to be experts by the end of this presentation, I promise. Okay, that's my expectation. Then we're going to tie it back together. As we go along, guys, we're going to be discussing some concepts, all right, that I'm going to be doing my best effort that, as we develop and as we go along in the presentation, we keep going back and tying all the concepts together. So by the time that we get to the end, you guys are real experts. You're able to see a chart and immediately tell me, hey, Eric, this is what we've been talking about. Here's a setup. This is what I'm looking for. Okay, that's what we want for you guys. And then in the end, if you're able to stick with me through the entire presentation, we have a little gift for those of you who are looking to really take your trading to the next level. All right. So a little overview on the system. This is a system that was designed by the team at Psycho Trader specifically for swing trading. This is not the swing trading system. This is a swing trading system that we've developed, that we've sort of boiled down to a formula, and that we're gonna teach you today. Okay, and then also, guys, just as a side note, it's very important that we always keep congruency between our expectations and the systems or strategies that we are implementing. So you will see here that I'm talking about targeting returns typically anywhere between 10 and 30%. And some of you are thinking, Eric, I've seen traders on the internet that go for 100% gains. And yes, that is true. But, it's a different type of system. I tell you, I've had trades where in a week or in a day, I've even made, triple and even 1,000 return percentages or 1,000% returns, but those are typically, I'm risking my position to zero. I'm doing really small positions, and the setups and the systems that go with targeting a return like that, do not make sense for what we're going to be talking about today. Okay, so this is very specific. This is laser focused to a specific type of setup, a specific type of company, and we're looking for specific types of results. And we're gonna detail and go over that, and you guys are really gonna understand what I'm talking about as we go along. So the holding period that we are targeting is going to be typically, a couple of weeks up to a couple of months, all right? We do not go over, let's say, 4 to 6 months. I would say 6 months is around the maximum that we're typically holding, because stocks will typically not run for more than 6 months uninterrupted, okay? So again, we're looking for 10 to 30% gains. And the main chart that we're going to be using across all the things that we're going to be analyzing is the same one. We want to be looking at the daily candle chart to anywhere between 4 to 16 months back, okay? So daily candle chart with 4 to 16 month time horizon. And then we're going to be going over the six main steps in the system. So let's jump right into it. The way that it's divided, all right, is that step number 1, we're identifying the setup. So this is learning how to find the trade, what we're looking for, okay? Steps number 2, 3, and 4 are more getting to know your trade. So really building that confidence in our research, in our due diligence, that is gonna allow us the confidence and the temperament that we need to execute in a correct manner, or execute in a manner that is in line with our strategy. Okay, those steps are to perform technical analysis, fundamental analysis, and macroeconomic analysis. We don't want to go too crazy, but these are things that we have to make into a system so that we can apply it over and over again, because at the end of the day, that is what we're looking for. We're looking for a formula that we can tweak as time goes on, that is gonna allow us to survive enough to tweak it and for it to have a correct fit for our personalities, for our expectations, and that is gonna allow us to enjoy the process, because this is a process, guys. Trading is a process. Traders do not make their money in a day and bounce. They are traders for life, okay? So that's what we're looking for: processes, formulas, things that we can apply over and over again, okay? And then the last step is to go over the trade parameters and how to execute and manage. So that's just really how to take action, or actually make the trade. So as you can see, again, step number 1, learning how to find the trade. Steps 2, 3, and 4 are about getting to know your trade. Steps 5 and 6 are about execution. So we're going to go over this slide right now of identifying the setup. Then we're going to go through some examples, and we're going to come back to this slide. And by the time that we come back, I promise you're going to see it in a completely different light. So if I mention some things right now that you don't know what I'm talking about, please bear with me. Let's go through the examples, and by the time that we come back, you're going to be an expert. All right. So in a nutshell, guys, what is the setup that we're looking for? We're looking for healthy, well-known companies, okay? So I'm not talking about some obscure cryptocurrency mining stock or some obscure biotech that is working on some crazy things. I'm talking about companies that when you say the name of the companies in a general public setting, people know what you're talking about. I'm talking Microsoft, Apple, Facebook, Netflix, Google, Qualcomm, Nvidia, Snapchat, Pinterest, Wells Fargo, Bank of America, JP Morgan, John Deere, Caterpillar, AMD. So all types, all these like very good, well-known, established companies, that's the ones that we're going to be considering for this system, okay? So we're looking for well-known companies that are healthy, growing as a business, and that also have general positive trends in the price, all right? We don't have to get too crazy, but when you zoom out of the chart, you know, you want to generally see that it's moving in a positive direction, okay? So we're looking for healthy companies that have a general positive trends in the stock price. And then we're looking for those companies that have a pullback, okay, into an important price level that is going to allow us to buy in and then swing the price back up to recent trading ranges, all right? So healthy companies, positive general trends in the stock price, and that they've had a pullback that offer us an opportunity, all right? And here's the second part of the system. What is that level that we are looking that the price pulls back into, okay? And we're looking for the price to pull back into the 50 MA, that's the 50-day moving average, the 200 MA, that's the 200-day moving average, or some notable price level that when you look at the chart, this level just jumps out of the screen and tells you every time the stock is going into this level, it bounces, or every time it's going into the stock level, it bounces, okay? Something that where you have 2, 3, 4 people looking at the chart, everybody can identify that one price level. And we're gonna get through some examples and you're gonna see what I'm talking about. And then, side note guys, the setups can be immediate or they can be preemptive. So meaning you look at the chart, everything checks out, and then it's warranted that you start to take action in that moment. Or you look at a chart and you say, okay, so hypothetically speaking, if the price were to pull back into here or here, I would start to get interested in taking a trade here. And you would set alerts, or you would set buy limit orders, you know, at a lower price than is trading right now, in case that the thing moves and you're not looking at the screen at that moment. You're either alerted or the system automatically opens a position for you, okay? We don't have to get too deep into it right now, but let's jump right into identifying the setup, okay? So before I go into identifying the setup, let me just quickly break down what we're looking at in the chart, because it's the same chart that we're going to be looking across the entire presentation, okay? So over here, I'm looking at the daily candle chart, okay? You see it, this is the 3-year 1 day. Basically, this 1 day, what it means is that each candle that you see represents one trading day or one trading session, okay? Hence the daily candle. Number 2, you see the volume down here, okay? Again, remember guys, we're going to be tying this volume, this 50 MA, this 200 MA, we're going to be tying it all back together, you know, as we go farther down the presentation. So we have the daily candles and we have the volume, okay? And then we also have the 50 MA. In this case, the 50-day moving average, that's the simple moving average, is represented by this blue line, all right? So you can see simple moving average, 50, blue, okay? And this is the 200-day moving average, the orange one, okay? Here you can see it, simple moving average, 200, and here it is, orange, okay? Don't worry about this close and zero, that's just a code for this charting software. But the blue line is the 50 MA, orange line is the 200 MA. We're looking at daily candles, and we also want to see the volume. And that's what we're looking for, guys. In this particular case, we're looking at 16 months back, roughly. So this is January 2020, and I'm recording this August 6, 2021, okay? So about, actually more than 16, about 18 months, 18, 20 months, okay? 18 months. Whatever. All right, guys, so let's go into the setup, all right? in this case, I'm going to be showing you a pullback into the 50 MA, okay, the 50-day moving average. All right, so we can see here, this is Starbucks, well-known company. This is the March 2020 COVID drop, you know, everything dropped. Here you can see it, it dropped, and then, you know, it starts recuperating, and by the time it reaches over here, August, September, you know, we can see that it's been trading generally in a positive uptrend, you know, from these bottoms, okay? So we start to look for the setup, okay? Here you can see it bouncing, and then it comes back and pulls into the 50 MA, okay? And it trades around there for a couple of days, and then it bounces up, okay? And then it pulls back into the 50 MA. Again, it trades a couple of days around that level. So any of these days, you know, you could have been scaling in, adding to your position, opening up a position, and taking the setup, okay? And thinking about this setup, all right? So we see it bounce. It had an incredible run. And then we see it pull back into the 50 MA again. This time it sort of broke down a little bit, and you know, if you would have taken, let's say, this setup here, you most probably would have either gotten stopped out here, or you would have been able to add down here. But let's say you would have gotten stopped out here, guys, that's okay, because this system contemplates that every now and then, you know, the trades are not going to work out. And one of the important things is that you have a system in place to keep those losses manageable, all right? Because this is very important, all right? When you start out, okay, the experience and your knowledge is going to come in the form of losses. What do I mean? When you're starting out and you're trying new things, you're going to lose money, okay? Most likely, you're going to lose money at some point when you're starting out, okay? And the thing is that you have to be conscious enough, okay, to keep those losses manageable in a way where it's going to allow you enough time to gather that experience, gather that knowledge, tweak your strategies to where you're becoming profitable, all right? So it's so important that we keep in mind that, you know, we want to keep our losses manageable. We want to live to see another day, and you know, we want to be set up to do this for a long time, okay? Anyway, so you see it broke down a little bit, but then quickly recovered in a big way. You know, these are some big green candles. It reclaimed the 50 MA and then bounced up, came back into it, sort of overshot it a little bit, but quickly recovered. Went up a little bit and then came back down, okay? By this time, it's reasonable to think, okay, that there's at least a 50% chance that this can bounce, okay? And if there's a 50% chance and you have a system to keep your losses manageable and take profits as you go along, it would have made sense to take this trade right here, okay? So you see it, in this case it bounced, it retraced again into the 50 MA, and then we had a nice run, okay? And then it comes back into the 50 MA and it starts trading sideways a little bit. Notice it does not break down, okay? So it's under the 50 MA, yes, but it's holding the price and it's not breaking down. So it's not bearish, okay? It's just consolidating. This is bullish consolidation right now, okay? Because if you can see, it's sort of moving upward a little bit. Not moving upward, but sort of holding this range, okay? So it's not breaking down, and this is good for us, okay? We would have, you know, sort of added a little bit, and been conscious and been cautious, and we would have been conservative until, you know, look, boom, huge run right here, okay? And then guys, also, the longer a setup takes to form or to occur, you know, usually the bigger the swings, okay? So if a setup takes, let's say, you know, 6 months to, you know, really occur, or, you know, it's hitting a big level, more likely the swing that you're gonna get from that trade is going to be bigger than, let's say, if you're looking for a little pullback, from here to here, from here to here, from here to here. And these are valid as well, okay? But in general terms, just know that the longer a setup takes to form, the bigger the swings are gonna be in general terms, okay? Let's look at another example. Again, this is Microsoft, well-known company, general positive uptrend in the price, and we're looking for a 50 MA pullback, okay? So as you can see, again, the March 2020 COVID drop, it hit all stocks across the board. And then we see it starts to recuperate, okay? And by this time, let's say August, it's already been trading in a positive trend for the last couple of months. Okay, so we want to monitor this. And here you can see it had a big run, it pulls back, and then it sort of consolidates sideways, okay? And look at this. So here maybe you wouldn't have been touching it, you had a run here, you wouldn't have been touching it because it's not the setup, okay? It went up and then came down, and look at this. All these days, so for about 3 weeks, 4 weeks, it was trading in a tight range just over the 50 MA, okay? So going back to what I mentioned just now about it not breaking down, we start to take notice of these things, okay? So we're not only looking for stocks that are running, but if a stock is holding an important level, if it's holding an important level and not breaking down, we want to have that in our radar, okay? So here it is. It traded just over the 50 MA for a long time, for about 3 weeks, 4 weeks, and then boom, it had a little run and pulled back, okay? By this time that it had this pullback, we are really interested in this stock and in this setup particularly, okay? And then look at this, boom, big run here. So this would have been a nice trade. Pullback, again, bullish consolidation right here. Not breaking down, not really going anywhere, but not breaking down and holding that 50 MA. So holding that important level, okay? And then boom, it had a bounce, pull back into the 50 MA, holds, and then boom, again, another one. So that's pretty cool. All right, let's look at another example. So we just looked at 2 healthy companies with general positive uptrends in the price that had pullbacks, kept having pullbacks into the 50 MA, okay? So now we're going to be looking at NVIDIA. Again, this is the March 2020 drop. And look at this. This was actually a nice 200 MA setup, okay? But given the macroeconomic conditions of this time where, COVID was going crazy, we were on lockdowns, nobody knew what was gonna happen, maybe you wouldn't have played it because of the uncertainty, okay? And it's important to consider macroeconomic conditions as well, and we're gonna get into that further down in the presentation. Anyway, so the stock starts recuperating and it starts trending up, okay? I want to mention, at the time that this was taking place, guys, okay, that this run from April to September was taking place, look at this, it was so bullish that it didn't even pull back into the 50 MA once, okay? So that's pretty outstanding and that's very notable. That's extremely, extremely bullish price action. If you have a stock that is just running for multiple months without even testing the 50 MA, that's very bullish, okay? And look at this, actually to exemplify the magnitude of this, in April, so after the drop, okay, let's say in April, the stock was trading about $70, okay, in April. And by August of that year, okay, so a couple of months later, it had hit $140. That's a 100% return on NVIDIA, guys. That's a huge company, okay? That's super bullish action. And then look at this, it trades sideways, it consolidates for multi-months as well. Just because, when you have a run like this in such a big established stock, I mean, you're going to need a second for it to take a breather and to consolidate, and for these people to, a lot of them to take profits, and then you want new buyers to come in, and then the stock is going to trade sideways for a bit, okay? But look at this, okay? So it pulls right into around the 50 MA, it holds, it has a little bounce, and then it sort of trades sideways around the 50 MA, okay? This is clearly consolidation, okay? This stock is consolidating. Jumped up, consolidating sideways. Okay, now look at this. Some wild action right here, okay? The stock sort of surges and pulls back violently right into the 200 MA. By this time, guys, okay, it's been pulling up, it sort of consolidated sideways, then it had this weird surge here, and now it pulls into the 200 MA. This is definitely something that I want to be looking at, okay? A big pullback into the 200 MA on a healthy company like this, that's very interesting. All right, especially if the stock price has been generally, going up for the last months, and in this case for the last year, okay? So pull back into the 200 MA, you can quickly see that, it sort of overshot it, but quickly recuperated, and then for the next couple of weeks, 2, 3, 4 weeks, it traded just over the 200 MA, okay? And as long as it's holding the 200 MA, it's holding the level, it's not breaking down from the level, the setup is valid, okay? This is telling us and confirming, across a couple of trading days that, hey, there's a good possibility that I'm going to be able to hold the 200 MA and then, go up from there, okay? And that's exactly what happened. It held it for a couple of days, 2, 3, 4 weeks, and then it jumped up, okay? This would have been a super nice trade, right? From 120 around to about 160. That's $40, okay? It's $40 or about 30% or 25% run. That's super good, okay? And then look at this. We had another pullback right into the 200 MA, okay? By this time, guys, this is an obvious entry, okay? And we actually sent out an alert when this happened to our members, and we still hold the stock, okay? Did we know it was gonna have this absurd run like this? We did not know at the moment, but the system, is going to allow us to buy and then, profit in a way where we're going to profit, if or as much as the chart allows, okay? So one of the things that you have to keep in mind as well is that you can only trade what you're looking at, okay? And that we as traders, we're not trying to predict the market, okay? We are simply playing probabilities and odds, okay? And we don't know, when the run is gonna happen or how high it's gonna go. So what we do is that, we take profits along the way, and we manage the open trade in a way where we let it run if it runs, and then we take profits if it, if the chart starts telling us that, hey, I'm gonna break down, or I'm gonna take a breather here and go back down to a level before I continue up, okay? So yeah, send out an alert here. This was an obvious 200 MA setup, it hit it twice, and by that time, the stock was ready to run, and that's exactly what it did. And then it pulled back. Look at this, another 50 MA setup, which is pretty nice. Okay, we're gonna look at Twitter now. Again, I'm going to show you a 200 MA setup here. So Twitter, 2020 March COVID drop, starts recuperating, has been trading upward for a couple of months already, and then we have a big pullback here into the 50 MA. And look at this, it holds for about 2 weeks just over that 50 MA level. So with everything that we've discussed, is it reasonable to think that after a couple of days the chart has been telling us, hey, I think I'm going to be able to hold the 50 MA. So for us, is it reasonable to think, hey, there's at least a 50% chance that this bounces from the 50 MA? Yes. And not only that, guys, but it's not random, okay? So at least there's a 50% chance you implement the system, and we're gonna see later on that, we're gonna do things to skew the risk-reward ratio in our favor, where, even if you're right 50% of the time, because your wins are going to be bigger than your losses, over time, you're going to average out a positive result, okay? But anyway, we had a pullback, holds the 50 MA, nice bounce here. Another pullback, it sort of overshoots, quickly recuperates, does not break down. And then we have another bounce, pullback, same thing. And look at this, wild action right here. By this time, maybe some of you are thinking, I don't want to touch this. This has gaps. This is trading big ranges. I don't know what's going to happen. And then all of a sudden, boom, we had a big drop right here. Okay, big drop on heavy big drop on heavy volume. Okay, we're going to, again, guys, I'm talking, I mentioned this thing, big drop on heavy volume. We're going to talk about, volume a little bit further down. Again, tying back all these concepts. So please bear with me if I'm maybe mentioning things that you're not 100% sure of what I'm talking about. Give me the benefit of the doubt. Let's get through this, and by the end, I hope that everything is making a lot of sense. Okay, so anyway, we had a big drop here. Take a look at the fundamental analysis, whatever, and this is a trade that we actually took with our members. Okay, so this thing dropped, it sort of goes into the 200 MA, and then it does not break down. Okay, and then when it started telling us a couple of days later that, hey, I really like this 200 MA, and there's a possibility that I'm going to hold it, we sent the alert. Okay, and I'm going to show you that trade, and we're going to go over it, and by the time you're going to understand exactly why we're doing what we're doing, and why we're taking the actions that we're taking. But anyway, into the 200 MA, and then we had a big bounce right here. So notice, the bounces that we have into the 50 MA, are typically smaller, okay, than the one that we had into the 200 MA. So the bigger the levels, okay, and the longer the time frames, the bigger the swings typically. Okay, not always, but typically. Okay. Let's look at another one. So we've just gone over, we showed you two setups or two charts where we're looking at multiple setups of a pullback into the 50 MA. And then we went over two more charts where we're looking at pullbacks into the 200 MA. And now I want to go over the third type of setup, which is a pullback into a notable price level. Okay, something that is just blatantly obvious for a lot of people if they look at the chart. Okay, so we're looking at AMD right now. AMD, semiconductor company, well known in their space, growing, positive general uptrends in this price. All right, here we see the March drop, whatever, recuperates, trades sideways, and then breaks out. Okay, it breaks out right here in a big way. All right, but notice this, it breaks out and then pulls back into sort of the 50 MA. At the moment it was a 50 MA, and then it just like trades really tight and does not break down. Okay, and then it has this like turbulent action for a couple of weeks. Okay, just keep that in the back of the mind for now. And then it goes up, pulls back. Now look at this, it pulls back exactly to the same price level it had pulled back and held a couple of weeks prior. Okay, so the exact same level. All right, now this is starting to become interesting and something that we take a note of. Okay, then the stock went up, traded beautifully, and then sort of pulled back down. And notice this, It pulls back down months after. So this was, the first pullback was in September 2020. The second one was in November or late October. And now look at this. Months after, in March 2021, the stock pulls back into the same price level it had pulled back into months before and held. Okay? And even, okay, this level is so important, all right, that when it pulls back here, it is not able to specifically hold the 200 MA, which is a big support level generally speaking, but it is able to hold this double bottom that it has formed from a couple of months before. Okay, so that by now we're looking at a triple bottom, and this is definitely a price level that we want to be, looking at, have charted out, and be aware of. Okay, then it pulls up, and look at this, it pulls back down into around the same price level. Okay, so this triple bottom, and it pulls and it trades 1, 2, 3, 4 days using that level as a floor. Okay, and then it sort of pulls up a little bit and it pulls back down. Where does it pull back down to, guys? You know the drill by now. It pulls back down into the same price level it has held for a couple of months before. Okay, so by the time that this happens, and notice it pulls back and it holds that level for around 7 days, something like that. Okay, so we had 7 days to sort of look at this, digest the information, scale into our trade, buy a little, do I like it, is it working, am I confident in the trade? And lo and behold, we got the breakout or the run, a nice run afterwards. Okay, and we actually took this trade as well, and we're going to go over it at the end of the presentation. Okay, so again, by the time this is trading over here, I'm already aware that this, let's say 73 price level, is really important in this particular chart. Okay, so when I see it pull back and holding for a couple of days, that's a buy zone for me. Okay, that's a buy signal. Okay, all right, let's do the last one, Qualcomm. Okay, so again, very well-known company, growing, positive trend in the stock price. March 2020 COVID drop, you can see it right here, and the stock starts trending upward, it recuperates, continues to move upward, and then look at this, boom, it gaps in a big way on earnings. So they had some really nice earnings, gaps up, and the thing just takes off. Okay, again, by this time you guys should be experts already, and some of you have already noticed, boom, pull back into the 50 MA, boom, pull back into the 50 MA, but whatever. In this particular case, we're going to highlight in a second a notable price level. But look at this. So it sort of bounces here, it comes down, it goes up, and then look at this. It comes back down into the 50 MA, and then it gaps up. Okay. Something that I'm noticing already is that this level that used to be a ceiling or a resistance, has now, after it broke out here, has now become a floor. Okay, and this chart is telling me this. Okay, by kind of breaking out and then coming back, testing, holding, and then continuing upward. With this action, this has just told me that this previous roof or resistance has now become a floor or a support. Okay? Keep that in the back of your mind for now. Then the thing just shoots up, trades upward beautifully. It pulls back, breaks down from the 50 MA, and now look. Bam! Straight into the 200 MA. all right? It also happens that that 200 MA, by the time it hit the 200 MA, this level is the same level that it tested here and confirmed as a floor, and that it tested here and that it told me was a roof. Okay, so roof, breaks through, tests it as a floor, trades upward, I sort of forget about it, and then it pulls back into the 50 MA and sort of bounces. Okay, so by this time I'm already noticing that, hey, you know, around this 120 price, there is something interesting going on in Qualcomm. Okay, and lo and behold, it sort of trades up a little bit, and then boom, it retraces into the exact price level it had tested and held here in the 200 MA, that confirmed as a floor, or 50 MA back here months before, that had tested and confirmed as a ceiling months before as well. Okay, so test, 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 test. By this time, guys, I'm really interested in this level. Okay, so maybe I set an alert, you know, maybe I didn't catch it here, and it starts going up, and I set an alert, and I tell my system, okay, so if Qualcomm, you know, comes back down again to 120 or to around 120, either let me know or just go ahead and buy some. Okay, and you can do that with buy limit orders or alerts, and pretty much any software, any trading software, any trading platform. Okay, so look at this. After it tests here, goes upward a little bit, and then sort of breaks down from the 200 and the 50 MA, and goes into the same price level it had tests and held a couple of weeks before, that had tested and confirmed as a floor a couple of months before, that had tested and confirmed as a ceiling a couple of months before. So by this time, you know, I'm really keen in opening a position at this level. Okay, and lo and behold, boom, it was able to bounce and get the little run that we were looking for. And we actually took this trade also with our premium members, and I'm going to show you something interesting, because of course in real life, okay, and as these setups are developing, maybe they won't be as clean cut as I'm showing you right now, or as clean cut as you're able to identify in a chart that has already taken place. Okay, so I'm going to show you that this actually had a setup here in that 200 and the 50 MA, okay, and then it had another setup right here at a triple bottom. Okay, and we're going to talk about that a little bit in the end, and what that means in real life, okay, or in a real case scenario. All right, guys, I told you that we were going to look at this slide, go through some examples, and then come back to it. And by the time we did that, you guys were going to look at it in a completely different light. And I hope that that is the case. So to wrap it up, guys, step number one, identifying the setup. We're looking for well-known, well-established, healthy companies, okay, that have, that's number one, well-known, established companies that have general positive trends in their stock price, and that have had a pullback into an important support level that will offer us or allow us, you know, a buying opportunity to swing that price back up into previous trading levels. What is that pullback that we're looking for? We're looking for a pullback into the 50 MA, that's the 50-day moving average. We're looking for a pullback into the 200 MA, 200-day moving average, or we're looking for a pullback into a notable price level. You could call it double bottom, triple bottom, multiple bottom. I don't really care, and the name is irrelevant, guys. What is relevant is that the price level is super notable and just obvious, okay? And again, setups can be immediate or preemptive. So if you need to use alerts and use buy limit orders so they get executed in the future at a lower price than you have at the moment. Okay, so that's it, guys. Step number 1. If you want, go ahead and pause the presentation, take a break, and then we're going to get into the second the second big section, which is getting to know our trade. All right, so step number 1 again is about finding a trade, learning what we're looking for in our setup. And now we're going into the second section, which is getting to know our trade. So why do we want to get to know our trade? Because this is going to build up the confidence, okay, we need in order to stick to our strategies. Because when we execute, guys, and the trade is open and that thing is moving, if we don't have confidence in our decisions, if we don't have confidence in our processes, chances are that we're going to deviate from the strategy. And more often than not, when you deviate from your strategies is where you start making bad decisions, and where things probably are not gonna turn out as you hoped. Okay, so let's go into technical analysis. All right, so we use technical analysis to systematize our decision making process in terms of buying and selling. Okay, we want that process where we're thinking about buying and selling to be as systematic and as emotionless as possible. And that's why technical analysis is important, because also having that system is going to allow to skew the risk reward ratios in our favor, to guarantee that we have positive results across a long time frame. All right, so when doing technical analysis, the first thing that you're going to do is you want to look at the chart. In general terms, you want to zoom out. Again, you want to look at the daily candles, and you want to look about 12-month, 16-month time horizon, and you want to just get a general sense of how the stock trades and how the stock behaves. So for example, is this a stock that has really wide ranges, or is this a stock that sort of trades that trends in tight ranges? Okay, so that's something that we want to be aware of, because when we're opening our trade and we're executing, we don't want to be caught off guard. So for example, if the stock has a sudden violent movement that we didn't contemplate in our trade parameters, or for example, we go into a stock and the stock is taking a long time to move, we want to understand that from the beginning, set our expectations straight, and just have the patience for that stock to actually develop and make the move that we're looking for. Okay, so very easy. Take a look at the chart and just become familiar with generally how the stock has traded or behaved in the past, so we can get a sense of what are some potential scenarios or how it could potentially behave going into the future. All right, we also want to look at the volume. All right, when we look at the chart, we look at the daily candles, we want to have volume in our chart. We quickly touched on this when we were looking at the setup on Twitter. So as you trade, and as you gain experience, you're going to start to notice relationships and patterns between prices and volume. Okay, and there are entire strategies that are based solely on what the volume is doing in X or Y scenario. But for our cases, we don't want to go too deep into it for this specific strategy, but just have the volume on your chart and sort of understand. So for example, in that specific case for Twitter, you saw the stock dump on heavy volume. So that tells me, by the time it dumps, it touches the 200 MA and it sort of holds, it's already dumped with so much volume that, a couple of days after the stock has been telling me that it's holding the 200 MA, who else is selling? Because by that time, everybody who wanted to sell would have sold already. Okay, so yeah, and then that just gives me a little bit more context into the entire trade that I'm taking at the moment. All right, so look at the chart, have the volume on, and just generally understand how the stock has behaved, okay? And we're gonna do pivot levels, all right? So what are pivot levels? We're gonna go through 4 examples now of what those are. And essentially, they are nothing more and they are nothing less than horizontal lines, all right, that you're going to draw in. So you're going to draw them in, I'm going to draw them in the chart that, to me represent important price levels in that chart, and that I'm going to use as guidelines, okay, to buy and sell my stock into, okay? So you're going to see, guys, that, at the end of the day, everything can be boiled down to where you're buying and you're selling into important levels, okay? So when we go through the trade parameters, you will see that, your profit targets, your stop losses, your buy zones, they're not random, okay? There are levels that you identify depending on what the chart is doing, okay? So again, I think I mentioned this at the beginning. We have to, or let me put it this way. As traders, we have to be very conscious, okay, and very aware to trade what we're looking at, okay? To trade the ranges and the opportunities that the chart is allowing. So we're trading what we're seeing, okay? We're not trading what we want to see, all right? So those pivot levels are gonna offer guidelines, okay? They're gonna offer guidelines from the beginning that are going to help, again, systematize and keep our decision-making process like a formula so that we can eliminate the emotions and that we can, apply this over and over and over again, okay? So another note on pivot levels, some people call them support, some people call them resistance, some people call them floors, some people call them ceilings, but just know that all those are actually pivot levels, okay? And it is a resistance only, in relation to what the price is doing. So, for example, if you have the price coming from the bottom into a pivot level, you're gonna call it a resistance because it's resisting that the price continue, okay? So it's gonna bounce, and then it's gonna have a hard time, and then it's gonna get through, okay? So it's getting through that resistance, all right? And then once it gets through, let's say if it comes down and tests it and bounces, okay, it's now a support. It's the same pivot line, okay? But when it was coming from the bottom, it was a resistance. It was able to break through, and then it's coming from the top, and it's sort of holding. So it's now a support, okay? So resistance are ceilings, and supports are floors, all right? Lastly, about technical indicators, guys. There are tons and tons and tons of technical indicators. You have the relative strength index, the MACD, Elliott wave, TTM squeeze indicator. You have, Fibonacci extensions, and just countless other indicators that are being developed, on a constant basis. But we're not interested in that right now. For our intents and our purposes in this system, okay, we are only interested in the 50 MA and in the 200 MA. Those are the only 2 technical indicators that we are going to be using. So on any charting software, on any charting platform, you're somewhere in there you would have an option where you can go open and select the 200 and the 50 MA, okay? And that's what we're gonna be using for this specific system, okay? So again, guys, technical analysis, the steps that you want to take, to feel that, your technical analysis box has been checked is, pull up the chart on a daily candle, look at 12 months back, and understand how the chart moves and if there is a relationship with the volume, okay? And then draw your pivot levels, okay? So draw what you're looking, draw what you're seeing, okay? Draw it. And that's also going to help because, when you create your trade parameters and when you're executing, okay, and you're buying and selling into these levels, these are levels that you came up with. So you're confident of what you're seeing in the chart, and it's gonna be easier, to decide or to stick to your plan. Whereas, if somebody, a third person, just tells you, oh, just sell when it hits 100 or sell when it hits, 57, and you're not really sure why the 57 or why the 100, it becomes more difficult to follow the plan and keep to your strategy. All right? So that's why we want to become experts in drawing these pivot levels. And also, if you're trading, guys, there is no way around this. You're going to be looking at charts, okay? You have to be looking at charts. You have to be comfortable looking at charts. So for the pivot levels, guys, I would just say, just go into a charting software, start going through big companies and just start charting, these levels out. Go onto YouTube, go onto Google, do a quick search, pivot levels, and you're gonna find tons and tons and tons of resources, and just become comfortable with this, looking at charts and drawing these levels in, okay? And then again, moving averages, the 50 MA and the 200 MA, and specifically that's the simple moving average, all right? So the 50 SMA, if you wanna get specific, or the 200 SMA are the only technical indicators that we are interested in for this specific system. And then lastly, as a side note, if you're a little bit more advanced, just take a quick look at the share structure. In general terms, the bigger number of outstanding shares a company have, generally the less volatile it's going to be, and the smaller the number of outstanding shares, the more volatile it is going to trade. If you don't know what that means right now, you can completely ignore it, and if you do, then good for you, but let's continue, okay? So, pivot levels, all right? I'm looking at a chart here of the Trade Desk. This is a software company. So let's say I would be interested in, potentially buying this if it came down to the 200 MA or something like that, When I'm looking at the chart, I want to draw these levels in, in case this comes back down, my alert is triggered, I already have an idea of what are some levels, that I could buy or sell into, okay? So let's take a look here. In June of last year, the stock was trading up, and then it sort of, you see it, it was going up, and then it traded sideways for a couple of days. It had a little bit of hard time, getting through this level. And then once it did, it was a clean breakthrough. Boom, a little clean breakthrough. Came back, tested and confirmed that it's going to hold this level. Went up, came back down, tested and confirmed that it was going to hold this level. Went up, retraced, went up. And, you can see that it got rejected at about the same level, okay? Then it came down, and check this out, came down straight into the same level it had tested a couple of weeks or months before. Okay, so by this time, okay, so this level sort of looks interesting, okay? Because multiple times across months, every time it goes back into it, it sort of holds, okay? So I want to take note of that, right? It's around $40 in this case. And then also, it got rejected twice at this level here, so I want to take note of that as well. Trades up, and look at this, it had some turbulence. So it really was going up, it was running, and then boom, it sort of went sideways, okay? So I'm taking note of this as well. All right, there's something going on here in this level because it wasn't able to get through to it, and then it pushed it back down. So it got rejected at this resistance, or it got rejected at this pivot level, or it got rejected at the ceiling. Whatever you want to call it, the name is not important, guys. What is important is that it is a notable price level and that it is a pivot line and that we draw it in, okay? Because in case, let's say for example, you bought this 50 MA setup, when it goes back up, you're selling into here, okay? So you're buying into the 50 MA and then you're selling into your pivot level, Okay, that's how we're gonna see that we're gonna use these levels. Anyway, so again, turbulence, and then it just sort of, you know, goes up. There's turbulence here, goes up, trades, break down. So I'm already seeing that it breaks down and it sort of holds this floor. So again, you know, that's a noticeable price level, okay? And also the same floor is now the ceiling on these peaks. Okay, so yeah, sure, I'm gonna draw a line in there. I'm gonna draw a line up here, you know, near all-time highs. Came down, it peaked right around up into that level before it got rejected, and then just like absolutely broke down. And then, you know, with the pivot levels, guys, you will find, you know, that a lot of times, you know, you will draw a pivot level, and then months after you've drawn a pivot level, you know, the chart will do something, and, you know, it will come back to that same pivot level that you drew months before. So typically these types of levels will hold, you know, across months and even years, okay? And a lot of times as well, you're gonna find that, so for example, at this moment where this was trading this turbulence, all right, it's clearly, you know, some sort of pivot level that I wanna, you know, take a note of. But at this moment, it was nothing more than just a level where it had turbulence. But months after, when it pulled back into that same level, now look at this, it's the 200 MA, okay? So you will find, you know, that a lot of times setups, you know, you will find like double types of setups, okay? So what was before a ceiling is now a floor. So what was before a pivot line is now a 200 MA setup, and stuff like that, okay? You will see that pretty often. And again, guys, you see, like, so imagine, you know, we only had the chart up until here, okay? So imagine from here all the way over here to the right, it was blank, okay? Just imagine for a second, all right? I would have already drawn in this level and this level, okay? And if I saw this break down into the 200 MA, I mean, I already know, you know, that there's a possibility that it could trade back up to this range, which is a notable pivot level. And lo and behold, it did exactly just that, okay? In this particular case, I'm charting the pivot levels after the fact, but, you know, you can start to appreciate how this could potentially work, you know, even on charts that have not yet, you know, developed, okay? So you can see it here, it goes down to the 200 MA, bounces into this pivot level, down into the 200 MA, can't hold it for a little bit, it sort of tests this pivot level, confirms that it's gonna hold, goes back up into the pivot level, which also happens to be the 50 MA, okay? Down, up, so you can see, guys, okay? And, you know, another thing, many charts, there are some charts which, you know, just sort of trend upward, okay? But in a lot of cases, okay, you're gonna find that charts, you know, sort of jump into ranges, okay? So even if a chart is like moving upward, you're gonna find that, you know, it trades like this, and then it sort of goes into another range, and then it trades, and then it goes into another range, and that, you know, I would say in 99, if not 100% of cases, you will be able to draw out these pivot lines on really notable price levels, okay? And maybe you don't put your pivot line here, maybe you put it down here, and that's okay, you know, because this is not an exact science, you know, but as a rule of thumb, okay, guys, if you just know that, you know, there's something around this level, okay, and you're simply, you know, using them to help systematize your decision making of buying and selling into these levels, you know, even if they're not charted out perfectly, just the action, okay, of selling into them and locking in profits, you know, over time is a discipline that is going to contribute positively to your bottom line. Okay, so let's continue. AMD, again, this is clear. It's, it touches, gets rejected, touches, gets rejected, sort of touches, gets rejected. So very clear cut that this is a pivot level that I'm interested in. Okay, and then check this out. When it breaks through, it's not subtle, it really breaks through and shows you, hey, I'm breaking through this level. Okay, and I'm so bullish, I'm just gonna test it for a second, one day, and then I'm gonna continue in my bullish journey. So anyway, we see the chart here, trade, we see come down, test, up, down, test, and so I'm drawing these out. Okay, I'm drawing these out. Okay, and if I were to consider, let's say, a trade in AMD in the future, I'm keeping these levels here and I'm extending these lines, to the right to wherever the chart has gone into the future, and I'm still, using these levels. So if it goes up here and then, it comes down, let's say in the future, it touches the 200 MA, I'm still looking at these levels, okay? Because as I mentioned just, a couple of minutes ago, these will tend to hold over months and over years, okay? So that's, this is so easy to see, this one right here, for example. So if this price comes back down, whatever, and starts trading around this range again, I still know that if it breaks down from this level, I want nothing to do with the chart, and I'm gonna wait for it to finish breaking down, and give me another setup before going back in. Okay? You can always re-enter a trade lower, guys. All right, so keep that in mind. Yeah. Let's look at another one, Micron. Okay, this is Micron. Again, it's trading this range, getting, bouncing off this floor, getting rejected on the ceiling, or bouncing on this support, getting rejected on this resistance, coming down, confirming, breaking through in an aggressive way, trading, coming down, confirming the floor that was previously a ceiling. Okay, or confirming a support that was previously a resistance. Okay, so it trades, bounces, goes up, comes down, bounces, goes up, comes down, bounces. So for 3 times that it hit, sort of this level, this 94 or 96 level or whatever, it bounced down, it got rejected, So I want to take note of that, okay? Every time it comes back down here to around that 85 level, it bounces up. So comes down to 85, bounces up, comes down to 85, bounces up, comes down to 85, holds. And then, it just holds until it's not able to hold anymore, okay? And notice, it's funny, usually, or not usually, but in a lot of times when you have price action, either claiming, reclaiming, or breaking down from levels, the moves will usually be like more violent than how the stock usually trades. Okay, so if you, for example, see a violent move like this one, and it does not immediately recuperate, there's a reasonable chance that it's going to go back down to the lower and find to the lower support, and find a floor before turning back up. Okay, it's very rare that if it does not immediately bounce back and reclaims it, meaning that this drop was sort of a fluke, chances are that it's gonna test the next support down before sort of catching itself and then being able to trend back up. Okay, again, look at this, going back breaking down into the same sort of level that it had broke through here and that it had confirmed right here. Okay? So again, guys, we're looking for peaks, we're looking for valleys, and we are looking for these, turbulent spots. Okay? Let's do one more. This is Marriott Hotels. Okay? Again, this back here, we had the March 2020 COVID drop. The stock sort of recuperated, and notice this. I mean, it just touches the 200 MA and just absolutely gets rejected in a big, big way. Okay? So dropping in a couple of days from around 115 or whatever this was, to 85. That's huge. That's a big drop. Okay? Anyway, so this thing trades, and I'm already noticing that this ceiling, okay, which also happened to be the 200 MA at the moment, or at that time when it hit, is also now a floor here and here. Okay, so I'm taking note of this level. Okay, in case, for example, this price breaks down into this level, I'm buying. I'm buying because I've already have it marked as a notable price level. Okay. And then, in case it was able to turn up, I would have sold into here, and then let's say it just breaks down, at least I was able to sell into here, Because likewise, as it's going up, and it's, confirming floors or supports before continuing up, it does the same thing when it's going down. So it will go down and then sort of test resistance and confirm to us that, hey, yeah, actually, I'm in no shape right now to get through that level, so I will probably be going lower. Okay? In this case, this is bullish. This is very bullish, so we don't have too much of a big of a downtrend, but you can see it here. Okay? So, it's sort of going down, and then when it finally breaks down and it actually touches this support, before it does anything else, it confirms to us, yeah, I'm not going to be able to hold this level, so I will probably go down again before, doing anything else or switching trends or, switching directions or anything like that. Okay? So, in a nutshell, guys, that's what you want to see in technical analysis. Look at the chart, look at the volume, sort of understand the relationship that they have. Look at the 50 MA, look at the 200 MA, and draw in your pivot levels, okay? And that's all we want for technical analysis, okay? If you do that, let's say you will have maybe not 100% of your bases covered, but for our intents and purposes, we have 90% of the technical analysis bases covered, and that's enough that makes sense with this system, and that is going to allow us to keep executing over and over again in a systematic and formulaic manner. Okay? So let's quickly talk about fundamental analysis. All right? So the technical analysis has a lot to do with the stock price, the chart, and the price levels. Okay? Fundamental analysis has more to do with the actual operations, okay, of the company. So the fundamentals of the company. So if you want to think about it, you have the stock, you analyze it with technicals, and then you look at the company behind the stock, or the company that is represented by that stock, and you analyze that company with some fundamental analysis. Okay, and let's not go too crazy into it, but quickly touch upon what sort of elements you just want to check when performing fundamental analysis to make sure that your bases are covered, and then you can move on into the next step and continue with your trade and continue with your strategy. So very generally, we want to become aware of the story of the company. Okay, so what it's been doing, where it's at today, and what are its plans for the future. Okay, in general terms, if we understand that, we've done some good fundamental analysis. Okay, so the way that we do this, okay, the most effective, easiest, and simplest way that I think you can do this is just look at the earnings calls. Okay, look at the last 2, 3, 4 earnings calls and make sure to include the last annual earning call as well. So earning calls, are typically done on a quarter basis. So you will have 4 earning calls in a year where they're doing quarter, and then they'll do the last quarter included with the results for the entire year. Okay, so make sure that you're looking at the last 2 or 3 earning calls and that it includes the last yearly earning call. Okay, that's the way that management or companies communicate, to investors or to the retail base, what has been going on in the company and what sort of results they are achieving. Okay, so it's an official snapshot, it's an official communication that the company is giving to us investors so that we know what they are doing. Okay, number 2, look at press releases. All right, in general terms, so as you are having press releases, they will typically be included or summed up or touched upon when they have the earning call. So let's say in January, February, March, I've had a couple of press releases, April, and then in May I'm doing my earning call. If I had material press releases during those months, I would typically touch upon those subjects or touch upon what they were when we do the earning call. Okay, so look at earning call and look at press releases. Specifically look at press releases that have been released after the latest earning call. Okay, so if the latest earning calls for the company that you're analyzing was on, let's say, May, and it's July, you want to look at if the company has had any press release during that time. Okay, so during the month of June or the month of July, because you want to know if there have been any material developments that the company wants to communicate to us since they had their last earning call. Okay, so that's it, guys. Earning calls and press releases are the way that we get the communication from the company to the investor base. That's an official communication, and that's the way that companies or public companies communicate to their investor base. Okay, so take a look at those. Then we want to look at what the experts are doing. Okay, so we're going to look at analyst rating, institutional activity, and insider activity. So analyst rating, they are institutions, bank, funds that are the so-called experts that they'll go in, take a look at a company, perform their analysis, whatever it is at the moment, and they will sum it up in a report, and actually they will sum it up in a rating and a price target. Okay, so this is what you're looking at when you watch the news and you say, oh, so JP Morgan has a buy rating with X price target, or Goldman Sachs has a sell rating with X price target. This is what we're talking about. Okay, so we want to know in general, what the analysts or what the experts are saying about the company that we are analyzing. And then, guys, this is important. Okay, do not take these too seriously. If you see a price target, at $100, it does not necessarily mean that the stock is going to go to $100. But just in general terms, we want to be aware of what the analysts are saying, because this is what a lot of the investor base and a lot of the institutions are looking at and making decisions of for their investment or trading purposes. Okay, so we want to know what everybody is looking at and what the experts are saying. Okay, not necessarily so that it influences our decision making, but so that we have awareness. Okay, we have awareness in the entire context of the trade that we're analyzing, and we want to know what everybody else is looking at. Okay, so analyst ratings, they sum it up with a rating. Usually it's either negative, neutral, or positive, and then you're gonna have a price target. So take a look at those. Okay. Then institutional activity. Namely, we want to know if institutions are buying or are selling our stock. So for example, if we're analyzing a stock and institutions are just buying up a bunch of those stock, that's something that we want to be aware of, and that could give us, potentially a little bit more extra confidence in our trade. Okay, that is gonna just give us more context into what we are doing. Okay. Likewise, if you see institutions that are just dumping your stock, this is gonna raise a red flag. And perhaps it will be the case that institutions are dumping and you still want to take the trade, and that's okay. But the important part here is that you're aware, okay, that you are aware of what these institutions are doing specifically, because it could have an impact. Okay, and what we really do not want to do is to make a trade, have the trade open, and then all of a sudden find out that institutions are dumping our stock. Okay, at the very least, we want to know beforehand what they're doing so that we are not caught off guard and that we are able to stick and execute our strategy. Okay. All right, so we look at the analyst ratings, we look at institutional activity, these are experts, and then we also look at insider activity. All right, so insiders are people who have access to non-public material information that can have a direct impact in the company or in the stock. Okay, so these are CEOs, CFOs, directors, and other types of officers or management personnel that have access to these types of information, and have an interest in that company, and they will be able to know more about this company than the average retail investor base. And for regulatory purposes, if they have some activity of buying or selling the stock in the company that they have these non-public material information, they have 48 hours to report it. Okay, so there are websites and there are places that we can go and look at insider activity. So for example, if we are looking at Steve Madden and we see that the CEO, the CFO, and an independent director, they each put a couple $100,000 or a couple $1 million out of their own pocket to buy the stock, this is something that we want to be aware of. Okay, this is something that again can give us a little bit of extra confidence when executing our trade, because we're thinking, okay, people who know the insides of the company, and who know it better than me, and who have access to all this information, are actually putting their money into this stock. Okay, and at the end of the day, you can have analysts who emit a report, who say something, but when you look at where institutions and insiders are actually putting their money, the message comes across with a lot more conviction. Okay, so I would rather see a CEO, a CFO, a director, and an institution buying a company that I'm analyzing. That's going to give me a lot more conviction than if X, Y, Z, or Z analyst came up with even the wildest sort of ratings. Okay, so again, look at the earning call, press releases. That's the official communication coming from the company to the investor base. Then we quickly want to look at what the experts are doing. We look at the analyst rating, institutional activity, and insider activity. And then lastly, we want to look at media. Okay, so we want to look at big media outlets, CNN, Bloomberg, Yahoo Finance, etc. Just to know, again, just to know what the rest of the retail or investor base is looking at. Okay, generally, guys, media is scandalous, so do not take those reports too seriously. Even you have big websites or big publishers that sort of have algorithms for creating articles. So you'll have things like, is X or Y or Z company managing their debt correctly? And that's an algorithm article, and we want to ignore those 100%. Okay, but every now and then you'll have a really good anchor, bring in the CEO, have an interview or something like that, and in those cases, we can sometimes pick up very important information that is going to help in our analysis. Okay, also every now and then you'll get a really good reporter that makes an in-depth dive of a company that actually researches and comes out with a comprehensive report that again can provide context or some sort of information to help us gain more clarity in the stock or in the company that we are analyzing. And then lastly, quickly take a look at what social media is saying, what the retail investor base thinks about the company that you're analyzing. Especially nowadays, guys, with everything that's been going on, with the huge online communities that are forming, they're having an impact, okay? Sometimes they're having an impact on the stocks and on the prices, and they're causing, movements in the prices of stocks, okay? And we want to be aware if the stock that we are looking at can be, or we want to be aware if the stock that we're looking at could be part of some sort of mass coverage like that, okay? So if I had to pick one social media outlet that is the best for researching stocks, I would say Twitter, okay? And the way that you do it is you just go into Twitter, and on the search bar, okay, you type in the dollar symbol and then the ticker name of the stock. So for example, if I wanted to look at Apple, I would type in the dollar symbol AAPL, and then I would be able to see latest top posts where people are mentioning Apple, as well as big accounts that have to do with Apple. So in a lot of cases as well, it's not only traders in the retail base that are talking about or covering or sharing information about a company that you might be researching, but also the company could have an official Twitter account where they communicate with the retail investor base with information that is a little bit different than formal press releases, and we just want to be aware of what those posts are, what people are saying, and just in general, what's going on in social media with this company. Again, we're not going to take it too seriously, but we want to be aware of what's going on because we want to have a complete picture. So when we actually execute and we pull the trigger, okay, we are not caught off guard with any information that can steer us off from executing our strategy, okay? All right, guys, so we've just gone through technical analysis, fundamental analysis, and now quickly, I just want to touch upon macroeconomic analysis. There are countless factors, guys, that can affect, all right, the stock price of a company that you are interested in that have absolutely nothing to do with the company, or better said, that are totally outside the control of your company. I'm talking about factors in the global macroeconomic environment. I'm talking about factors in regulatory environment, or I'm talking about factors that have to do with the industry, competition or peers. All right. So for example, let's say that you have, so I'm recording this on August 6, 2021, and for the last couple of weeks, we've had some intense regulatory crackdown in Chinese companies, okay? So regardless if at the end of the day, okay, this impact, is going to be material long-term for the companies or not, the uncertainty, okay, of this crackdown has caused a sell-off, a huge sell-off in a lot of Chinese companies. So for example, if I was considering a trade, let's say in Alibaba or Roku or something like that, this is something that I want to be aware of, because again, imagine I go into Alibaba or I go into a trading Roku, and a couple of days later I'm reading headlines about regulatory crackdown in Chinese stocks. Okay, if I was not aware of this before I entered the trade, this could very well be a factor that just steers me out of my strategy, and that sends me to make the emotional decisions at the moment, which are probably not going to end up as I would have hoped. Okay, so again, another example could be, let's say, cryptocurrency regulation. So depending on X or Y cryptocurrency regulation, it could have an impact, let's say, on cryptocurrency or blockchain stocks. Another example could be that the CDC or the FDA comes out with X, Y, or Z guideline, that could have an impact, let's say, in a pharmaceutical company that you were considering, for example. Another example, when talking about industry and peers, could be, let's say that you're considering a trade in a semiconductor company or something like that, and then all of a sudden Apple just cuts the relationship with Intel and will no longer be using Intel chips. Okay, that is something that you want to be aware of. Or for example, Nvidia acquires ARM, two different types of technologies that are used for building semiconductors, just created this powerhouse. And let's say if you're considering a trade in a peer or in that company, you want to know what's going on. Okay, you want to be aware of these things. Okay, so don't go too crazy, guys. Do a quick Google search, a quick social media search, and just have a general idea of what is going on in the environment where the company that you're looking at operates in, that could potentially have an impact in its stock price. All right, so this is a moment where if you want, you can go ahead and stop the presentation, take a break, come back. But essentially, we've gone over step number one, which is identifying the setup, which is teaching us how to find, the setup. What are we looking for? What are the elements that we're looking for? And we're looking for that good company, positive uptrend, pull back into the 50, 200, or a very notable level. And then we're looking at steps 2, 3, and 4, where we're, researching, doing some due diligence, and getting to know our trade. And guys, side note here, I mentioned things like analyst ratings, I mentioned things like insider activity, institutional activity, and some of you are thinking, Eric, that's all well and good, but I have no idea where to go, what websites to go into to search for that information. Okay, and for the purposes of this particular presentation, we are not going to get into it, but by the time you're seeing this, okay, we have in our website another presentation on how to do due diligence on companies, and we go specifically, into each of those items, the analyst ratings, the institutional activity, insider activity, and we actually go, or earnings calls, press releases, and we actually go into the websites. Okay, I show you what websites to go, what to type, where to type it, what tabs to click, and what the document looks like and how to go through the document. So if you're interested in that, you want to bring this full circle and you want to really start building up your toolkit, we definitely encourage that you go check that out. It's totally free, and it's included in our basic membership, which is free. You can go in, access. Again, it's a presentation. It has a PDF document accompanying it, which you can download and do whatever you want with it. All right? So let's now go into the meat and bones of the strategy. All right? We sort of, build up the skeleton, build up the structure, and now we're going to go into the trade parameters. All right? This is where we're actually going to do some examples and work through some examples so you guys can really get a sense of how we can use these trade parameters in real case scenarios to skew the risk reward in our favor and then just guarantee that, across time we get positive results. All right, so let's jump right into this. Why are trade parameters so important? Because entering a trade, okay, without a plan, okay, is going to leave you ill prepared, and it's going to leave you exposed, so that you're not going to be able to, number one, capture the according gains in case the trade works. And then on the flip side, it's not going to allow for you to manage your risk properly in case the trade does not work out. Okay? In hand with that comes understanding your position sizing. Okay, so position sizing, we want to be comfortable, guys, when we execute the trade. We want to be comfortable with our worst case scenario. Okay, understanding, being aware of our worst case scenario, okay, before we enter the trade. So let's say, if the trade does not work out and I absolutely hit my maximum stop loss on my full position, and the trade just absolutely flipped on me and did the worst thing that it could have possibly done, we want to be comfortable with that scenario. Okay, that is going to allow us, the confidence and just the calmness that we need, again, to stick to our strategy, be systematic, and be emotionless. Okay, the way that I would recommend you to do this is to work your way backward and say, okay, so what would my full position need to be for my worst case scenario to come out to a $20 loss? Okay, and you can do it that way. Also, very important, guys, adhere to a minimum 2-to-1 risk reward ratio, because that's going to guarantee that even if you're right only 50% of the time, that because your wins are bigger than your losses, you still come out in a positive result. Okay, so always use the tools that we are talking about here, okay, to skew this risk reward ratio in your favor as much as possible all the time. Okay, and so just to sum it up, guys, before we actually go into the exercises, the trade parameters are nothing more and nothing less than entry levels, profit targets, and stop losses. Okay, so with that said, let's go right into the examples. We're going to work through these. By the time we're in example number 3 and number 4, you're going to be shouting at your screen, Eric, put the level over here, and you guys are going to be experts. Okay, and that's what we want. So let's do it right now. First thing first, guys, we have a daily chart. Okay, we have our volume, we have our 50 MA, we have our 200 MA. Ideally, we want our pivot lines here, but for the purposes of working through this example, we're gonna draw our pivot lines with our trade parameters as well. And yeah, let's go right into it. So this is Disney. Everybody knows Disney. Very well-known company, growing, well-regarded, and the stock price, sorry guys, and the stock price is in a positive uptrend. Okay, so right now at the moment it's traded and it's sort of pulled back into the 200 MA right now. So if I were considering a trade here, let's say, okay, so I'm going to be considering a setup of the pullback, a pullback into the 200 MA. All right. So the potential level that I'm able to buy right now, it's around 171. Okay. So now we want to put where a potential stop loss could go. Okay. And this is not going to be random. Again, guys, we want to look at the chart and trade what we're looking. Okay, we want to trade what we're looking at. We don't want to trade what we wish was there, because that's only wishful thinking. So we got to be very subjective, very objective, and very systematic when doing this. Okay, so again, what level, if I were to buy here, okay, a setup in the 200 MA, okay, we got to be congruent, guys. This is a 200 MA setup, so keep that in mind. All right, what level am I looking at here, okay? That if the chart, reaches that level and sort of breaks down from there, I don't want to be interested, okay? I wouldn't be interested. So what level are we looking for that if it breaks down from that level, I'm not interested in holding that stock anymore, okay? And I would take my loss and move on, all right? If I had to choose, I would say it would be somewhere around here, okay? Why? Because over here it gapped up, went up, sort of came down, and it confirmed, a 50 MA, went up, and then came back down, and then it so happens that it's the same level again. So this is a 200 MA setup, but are there chances, okay, that this breaks down and touches this level before continuing up? Yes. Is it gonna do that? I do not know, okay? So that's why we're gonna do these traits parameter, and you're gonna see in the end, it's gonna make all the sense in the world, and the risk-reward ratio is going to be skewed in our favor. So that would be a potential, stop loss where I'm saying, okay, if it breaks down from that level, I want nothing to do with it, okay? And the way that we do stop losses for this particular system is that we consider, okay, so if the level closes the day, okay, at this, under this level, then our stop loss has been triggered. You will have sometimes flukes, okay, so for example, like here, and you could have intraday something that just like drops and then comes back up, and we don't want our stop loss triggered by that, okay? And because we are looking at daily movements, okay, so we're looking at movements that are going on in a day, and our time frame, is a couple of weeks up to a couple of months. The way that we handle the stop loss again is, if the price comes down here and closes the day below this line, then we consider our stop loss triggered, okay? So it's not like it's gonna drop intraday, come back up, and then our stop loss would have been triggered, okay? Because that would happen, and yeah, we want to avoid that. All right. Anyway, so where could our first potential profit target be? Okay, and again, guys, not random. Just looking at the chart, where could it be? If I had to choose, I would say somewhere around here. Okay, because when it broke through, it kind of touched, came down, and it was rejected at this level. Once it broke through, it sort of confirmed that it was a floor, broke down, and then it's having a really hard time, let's say, getting through that level. Over here, it sort of got through, but quickly came back down. So this was sort of a fluke, okay? And then here it touched, came back down, all right? So this is my first profit target, okay? In case, if I buy and this thing sort of trends and touches it, I want to sell some and secure profits because I don't know if it's gonna touch it and then come back down, okay? And I wanna have profits on my side in case that happens, all right? Some of you right now are thinking, aha, Eric, you're talking about a 2-to-1 risk-reward ratio, and what you've drawn here is basically a 1-to-1 risk-reward ratio, okay? And you're right. Bear with me one moment, 1 second, and I'm gonna get to that. Okay? So I'm gonna put a second profit target, let's say around this level, and then a third profit target, potentially, let's say around this level. Okay? So let's do a little bit of math right now. Okay? So I'm buying potentially in this setup, okay, around 171, okay? To my downside, let's say I have right now 165, but let's say, I'm super conservative. I want to give it some more room. Let's say somewhere around 161 or 160, yeah, 160, let's say 160. Let's be very aggressive, like super, let's give it a lot of room, okay? I want to say 160, okay? So now my risk reward ratio is even, further to the downside because, we had this fluke here. So yeah, 161, yeah, that makes sense. So what we would do, okay, and we're gonna talk about this a little bit more in the next examples, as well as in the last section, which is actually executing and managing your trade. But what you would do, okay, and one of the most important things that you need to always do is you would scale in, okay? So you're not buying full position out of the gate. Guys, remember, these are trades that are going to, take days, weeks, or even months to develop. So, we have time to, see what's going on, look at the trade, see how it's behaving, add into our position, scale out. We're going to have time, to operate. But anyway, so we buy here at 171, and let's say, I don't want to have my stop loss $10 below my full position. So what I would do is, because there's a possibility, that the price comes down to around this level and then bounces, and my trade would still be valid. So I'm gonna put another buy level, okay, down here. Okay, so about down here. So about 167, 168. All right, so I'm buying half my position at 171, and I'm buying half, finished, and I will finish buying my second half if it reaches, let's say, 166, okay? So that's gonna give me an average price on my full position, okay, of about 168, all right? So if I have my stop loss at 161 and my full position average price is at 168, I have $7 to the downside on my stop loss. So in this trade, I'm risking $7 on my full position, okay? Now, maybe it will happen that I buy in half my position and the thing just takes off, and that's fine, guys. We get filled partially all the time, and believe me when I tell you that a partial position on a trade that works out is a lot better than a full position on a trade that does not work out, okay? So if we get filled only half and the thing takes off, we are very happy, okay? And that also, let me do a side note here, that also comes in hand with, there's a very dangerous thought, okay, that is very common across a lot of people when they are starting out, okay? And this thought is, oh, I'm leaving profits on the table, okay? I'm telling you right now, if you are thinking this, if this thought crosses your mind, do whatever you need to do right now. Find whatever psychic, whatever psychologist, whatever mentor, meditate. Do whatever it is that you need to do to completely remove this thought from your mind, because that's a very unhealthy thought. I do not know of any successful trader that, entertains this idea of, oh, I'm leaving profits on the table. Guys, nobody ever went broke taking a profit, okay? And you can always take partial profits if you're not sure, and then, leave the last quarter of your position running into infinity if that's what you want, but you have already secured profits. Again, nobody knows, even with the best chart, the best setup, the best news, the best analyst ratings, the best earnings, the best everything, okay? And the stock should go up. That stock could crash, and we don't know, okay? And the system, okay, the only thing that we can do is to apply a system that, allows us to take partial profits, keep our losses manageable, and that allows us to profit whenever we have those big runs, okay? We don't know when they're gonna happen. In many cases, you know, you're not going to capture 100% of the move. You know, if you're lucky, you'll capture 50% of the move, and this is okay. Okay. And if you're thinking, oh, I should have just held a little bit longer, or oh, maybe I shouldn't have sold half and I would have just sold my entire position a little bit higher. You know, if you're thinking this, guys, you know, even if you do a good trade, you know, that thought is gonna, you know, have a negative effect in your confidence, and it's not gonna allow for you to really, you know, savor the little victories, and really, you know, it's not gonna allow you to develop, okay, the confidence that you need to be able to execute systematically and emotionless, you know, over and over and over again. All right. So if you have that thought, completely remove it from your mind. Anyway, going back to our example, we bought half position at 171, bought half position at 165. Our average position is somewhere around 168. With our stop loss at 161, we have $7 to the downside. Okay, but from 165 to 181, okay, which is our first profit target, all right, we have about $12. Is that correct? So 168 to 170. So we have about $13. All right. So we have $7 to the downside on our full position from 168 to 161. And we have $13 to the upside from 168 to 181. Okay. So we've essentially, by scaling in and using these trade parameters, buy zones, stop losses, and entry levels, we've essentially just skewed the risk reward in our favor for this particular 200 MA pullback setup. Okay, so that's pretty cool. Let's do another one. All right, here we're looking at a company. It's called Digital Turbine. They do ads for mobile implementations and stuff like that. Don't mind that at the moment, but anyway, so again, the company is producing revenues, it's growing, positive uptrend in the price. You know, we have had a pullback here into the 200 MA. It's also a notable price level. You guys know that by now. And then boom, another pullback into the 200 MA. Okay, so it's kind of held, you know, this 200 MA, and it's not breaking down from there. Again, guys, you know, we talked about this at the beginning. If it's holding, you know, a setup, so if it's holding a 50 MA, if it's holding the 200 MA, or if it's holding a notable price level, you know, we are interested in it. Okay, so let's look at this. Let's say I buy into, or I mean, I wish I would have bought here, but I didn't, you know, and this is what I have now. So I have to work with what I have, okay? I have to work with what I'm seeing. I have to trade what the chart is giving me, not what I wish it was, okay? So again, we have a potential entry around $63, okay? What price am I looking at here where if the chart, you know, breaks down from there, I want to get out, take my loss, and I want nothing to do with the chart. I want for it to finish breaking down or finish doing whatever it is that it's going to be doing until it allows for the next setup, okay? I would say, you know, somewhere around this level is my absolute worst case scenario. So about here, okay, 50. I mean, that's a big range. That's a big range. And again, you know, we were talking about looking at the stock and understanding the behavior, okay? This stock trades big ranges, guys. Okay? So this stock trades big ranges. You can see here, you know, from a couple of days, you know, it's going from 100 to 60. That's a 40% loss in a couple of days. That's huge. These are huge ranges, okay? But anyway, so entry point, what is a potential, you know, profit target that we're looking? I would say somewhere around here. is a potential profit target, you know, that we want to take. All right. So yeah. So we have an entry around $63. Okay. So we have an entry around $63. We have a maximum. Oof, and this is aggressive. You know, I'm not super comfortable with this setup, but you know, again, we have to take whatever, you know, the charts are giving us. Okay. So again, if we were to scaling out the gate, which we are not going to do, that would be crazy. Okay. So again, is there a possibility, okay, given the big ranges, that this, you know, sort of touches these levels, or this level, you know, this level here, before continuing up? There is a possibility. Okay. So maybe, given the volatility for this stock, maybe I don't go half my position out the gate. Maybe I can do a third or a quarter as well. Okay. And so the nice thing about this, guys, is that as you're going through these exercises, you know, our risk tolerance is going to differ from individual to individual. And, you know, as you implement this across time, you'll be able to tweak it, you know, to really fit your personality. Okay. So anyway, we have a buy zone here. Let's say I buy a third of my position here at 63. And in case it drops down here, I'm buying the rest of my position. Let's say, since we're going in a third or a fourth of our position, when we go in, the average is going to be around 57, because a 50, you know, 55, 54 price that we're going in potentially, you know, is going to weigh more than the 63 entry. So it's gonna, our average is going to be about 57. That's right. So about 57. So I have on my full position about $7 to the downside. So from 57 to 50, no, $7 to the downside, and then from 57, okay, to 70 or 71, you know, I have $13, $14 to the upside. So again, okay, because the ranges were wider than in the previous example of Disney, you know, I could be more conservative, and instead of going half position out the gate, I'm going, you know, a third or even a fourth. Okay. And if you want, you can do even an eighth, you know, so you're monitoring the stock, and you can add as many times or in whatever percentages that make you comfortable. Okay. So again, you know, we put one target there and we put one target here. So keeping with this example, let's say I have 57, you know, as soon as the stock, you know, hits an important level, okay, so maybe it hits the 50 MA or it hits this level, I'm selling some of my position and locking in profits, okay, because let's say if it goes up a little bit, you sell partially, half, a third of your position. If it goes down, you know, back down to your entry level, you know, you would get stopped out. We're going to talk about this a little bit more. So, you know, again, going back and tying, you know, each concept, when we go to the next step of actually executing and managing your trade, we're going to talk about this a little bit more, of moving your stop losses up and just guaranteeing that the risk or that the trade becomes risk-free. Okay. So in a hypothetical scenario, again, my average is around 67. Let's say it goes up 57. Let's say it goes up here to the 50 MA or to this my first profit target, and I'm selling some. You know, I'm moving my stop loss up into 57, because in case this thing now like reverses and just dumps and absolutely collapses, I'm getting stopped out on the remainder of my position even. Okay, and I've just secured a small win on a trade. Would I have liked for this just to continue up into infinity? Of course. You know, I like bigger wins better than smaller wins, but I also like smaller wins because, you know, they get me through the day. Okay, And those smaller wins are the ones that average out, any losses that I have. So whenever I get a big run, it's just directly contribution to my bottom line. Okay, so move stop losses up. It's guaranteeing that the trade becomes risk-free on the remainder of the trade. And again, I have just skewed the risk-reward ratio in my favor. Okay, just to go over maybe another potential way in which you would play this exact same setup, it's like this. So let's say, for example, I go in and I buy a quarter or a third of my position at 63, and then the thing just sort of continues to trade on those levels for another week or two. Okay, by that time, guys, the chart is telling me, hey, Eric, this setup of the 200 MA, is becoming more valid than this, notable price level setup. So go ahead, I would enter the rest of my position, let's say right there at 63, but by that time, okay, because since I'm entering at the 200 MA, okay, and I'm not contemplating that it's coming down into this notable price level, and I'm adding at the 200 MA, but that time, okay, my stop loss is considering the 200 MA setup, and it's not considering now this notable price level. Okay, so this would have been a little bit more dynamic, where now my average is still 63, okay, but my stop loss is now around 58 or 57 or whatever the case may be. Okay, because now my stop loss is not in this notable level, because the chart has traded for X amount of days or weeks and confirmed, okay, that hey, I want to hold this 200 level. I don't want to go back down to test this because I'm holding it for so long now. Okay, and could it still break down from there? Yes. Okay, it could still break down, but that's the chances that we're taking. Okay, so we're playing the probabilities, we're playing the chances within a system, that we can execute in the same way over and over again, and sort of, level the results where we can, average out positive results. Okay, and that's the whole idea, guys. Make it a system, make it repetitive, something that you can, just take from trade to trade, from company to company, from setup to setup. Okay. All right. So again, our average price on our full position is $63. Since we have moved our stop loss up, our stop loss is now, let's say, at 58. So to the downside, I'm risking $5, and from, let's say, 63 to 71, all right, I'm looking for $8 to the upside. So maybe not in this case an exact 2-to-1 risk ratio, but still, almost a 2-to-1 risk ratio. And maybe for some of you who are, really systematic and really diligent, you would look at this and you would say, okay, maybe this is not a setup that I'm interested in. Or if you were a little bit aggressive, you would say, okay, maybe this is one I'm interested in because, given the big rangers, there's a possibility that this could just like shoot 290 and become a really big gain. Okay, and that's where, tweaking the system and adapting it to where you feel comfortable, really comes into play. All right, let's look at another one, just to really, really drive this home and cement this. Okay. If you want, feel free to stop the video, take a screenshot, and draw some levels in, and then let's see what I do and we can compare. Okay, so again, let's take the buy levels right now. This is offering me a buy level, let's say at around 47. Okay, again, my stop loss, not random. So I would say, there are some big levels here. If this thing is breaking down, below, let's say 42 or whatever this level is, I'm not interested. Okay, it was a top here, it was a floor here, and then it sort of came down almost into it, bounced almost into it. So, this is telling me that really if it breaks down from here, chances are that it's going to continue down. So if it's not bouncing as it has here, here, and here, then I'm not interested, because that's what I'm looking for. Okay, I'm looking for that bounce. All right, so let's say we go in at 47. We have our stop losses, let's say around 42. We're $5 to the downside in the range, okay? And we're looking for a first profit target, let's say of about 55, okay? So about 55. If you're super conservative, you could even do it. Let's say I'm looking for a first target of 52 at the 50 MA. That's valid. Second target here, just over 55. And then let's do a third target. And in case this thing goes crazy, let's have a last target over here where, by the time, if we reach here, I have already sold, about 7/8 or 3/4 of my position. Okay. So again, we're buying at 47. We have our stop loss here around 42. Let's say we have $5 to the downside, and we have about $5 to the upside. Okay, so even though the range, okay, is the same, now we're gonna scale in, okay, again, in a way to skew the risk-reward ratio in our favor. Okay, if this was your level, then you had this range. But also maybe somebody who likes tighter stops, maybe they're looking at, Eric, that's too far down for me, and I'm looking for a level up here. I wouldn't want to see it break down from the 200 MA. And that's valid as well, okay? Because as you can see here, it also works, okay? So again, you could have, two scenarios, all right? And maybe we're looking at the same thing, but we're interpreting it slightly different, okay? The important thing here, guys, is that you do the parameters and you think about, scaling in a way where the risk-reward ratio makes sense for you, okay? And that you are comfortable with it, and that you understand, the worst-case scenario, all right? So let's continue. We go in at 47, and let's say, all right, I'm gonna go in half position in case this thing goes down to 45. I'm gonna finish buying, and then I'm gonna have a total average price on my total position of about 46, okay? Because I bought half at 47, and in case it drops down to 45, I buy the second half, and so I'm gonna have a total average price of 46 with a stop loss. If it was this one, it's 44. It's only $2. That's super tight. But let's do this one just for the heck of it, and because just to get through the exercise, okay? But you have your stop loss at around 42.50, or about 43. Okay, so 42.50, $43. All right, so we're down. Okay, we're risking about $3 or $3.50 because our average price on our entire position is $46, and we are risking down to 43. Okay, so that's about $3 to the downside. Okay, and to the upside, our first target is at 52. Okay, so from 46 to 52, it's about $6, which is double, okay, our downside. So in this case, and it's actually a little bit more than double because it's 52.75, but whatever. In this case, we were able to achieve very easily, very systematically, a 2-to-1 risk-reward ratio. And again, in case this worked out, you would sell a piece into here. If it retraced, you would get stopped out on the rest of your position even, so you can guarantee profits. Or in case this continues up, you sell another piece here. In case it continues up, you sell another piece here. Or in case it comes back down, you can either get stopped out here or just over here below to give it some room, to get a second leg up, okay? Or, you can add by this time at the 50, and you say, okay, now I'm doing a 50 MA setup and I'm moving my stop loss up here, okay? So it's up to you guys. This is a dynamic system. The important thing is that you go through this exercise, that you think about your risk-reward ratio, and that you know beforehand, okay, before you pull the trigger, before your money is going up and down wildly with the moves of the stock, what are some potential scenarios or some potential levels where you're buying and selling into, okay? And when you have this and you execute, you want to stick to those levels. Let's do the last one, okay? So Take Two Interactive, again, guys, very well-known company, generally moving in a uptrend. Had a big jump here. I know specifically, this was on earnings. I went through the earnings, and they were okay. They weren't, in my opinion, this was a total overreaction in the market. We'll usually do that. The market will usually overreact to the upside or to the downside, and then sort of catch itself a little bit later. But anyway, so let's do this one. Right now, it's offering us, let's say, an entry at 157. Okay, so that's what we got. Entry at 157. Potentially, what would be, a level that if it breaks down from there, I want to just take my loss and move on. I can tell you right now, it's about this level right here. Okay. You can see, it was trending up, had a little bit of turbulence here, some big candle, big volatility, and then it broke through, okay? Broke through, came down, tested, went up, and then, there was another notable level here, but unfortunately, it broke down from there, okay? So we're looking at this one, which is still, in my opinion, a very notable level. It's a very big level, and yeah, one that is completely valid still today, even if it was set months before, okay, or even a year before, okay. I don't care. All right, so yeah, so we're entering a position around 156, 157, and we have a stop loss at around 150 number. This setup is cool because the downside is just naturally very close to the upside, okay? And now I want to be very conservative in my first target, and I'm going to put it at the bottom, let's say at the bottom of this range right here, okay? If you want to see what it looks like over here as well. This is how it cuts through this price action here. But anyway, it's this bottom, okay? So again, we're around 156, 157. We have our downside to 150, and we have our first target roughly at around 165, okay? So 156 to 165, that's about $9 to the upside, and we have about $7 to the downside, $6 to the downside, all right? So already, our upside, our first target, has a little bit more room than our downside. And again, we have this tool in our toolkit of scaling into a position where, it even helps us to guarantee this risk-reward ratio in our favor even more, okay? So we want to take advantage of that. Again, we go in half a position. Let's say this thing takes off, it's taking off with half of our position. So that's good, even if we don't get to add the second half. Okay, I'm gonna put up another price target here, whatever, which is at the 50 MA. But yeah, so we go in 156. We have about $6 to the downside. 165. We have about 156, 165, about $9 to the upside, $6 to the downside. So, again, we would buy about half of our position to start with, and in case, you know, this level hold, it started to go upward, we will buy the second half, move the stop up, or in case it goes down, you know, buy the second half, and by that time, you know, our stop loss is closer, you know, so we have less range to the downside than we have to the upside. You know, again, just skewing that risk-reward ratio in our favor, all right? So we do that by, you know, creating trade parameters that make sense and scaling in a way that makes sense, okay? Some last comments, guys. You know, very important, trade what you see, not what you want to see. Trade what the chart offers you, not what you want it to do, okay? The market will do whatever it wants to do, whether you agree or not, okay? So the only thing that we can do, again, is have a system in place that, you know, is going to either protect us, you know, on the trades that don't work out, or that it's going to allow us, you know, to profit on the trades that do work out, okay? Because even, I mean, in my experience, I can tell you guys, I cannot tell you, okay, how many times I've lost money on a chart that is just going up, okay? And I see it and I say, okay, this thing is just moving up. How the hell did I manage, you know, to lose money, okay? And it's because my head wasn't in the game. You know, I wasn't trading what I was seeing, and, you know, I was just overall sloppy, and it will happen, okay? So that's why it's so important to have a system, because, you know, if you're making decisions on the go and as you go along, you know, there is no way to guarantee, or there is no way to track, let's say, you know, a reliable set of outcomes that you are able to tweak, you know, throughout time. There's no way that you can sort of guarantee, you know, the same types of results or guarantee the same types of setups if you don't have a system in place, okay? And, you know, you will not be able to time the top, time the bottom, and if you try to do that, you know, just on an ongoing basis, you're gonna be wrong at least 50% of the time, and, you know, even more than 50%, but, you know, for argument's sake, let's say 50% of the time, and because sorry about that, and because the system, you know, it's not protecting your downsides, you know, and let's say at the best case scenario, your wins, you know, are the same as your losses, you know, you will never be profitable in the long term, okay? So again, you know, I don't know any trader that is profitable in the long term that does not have a system in place, okay? It does not exist, all right? So again, you know, we can only trade what we see. Again, with the system, you know, you put your trade parameters, you think about scaling in, and, you know, that's a system, guys. You do that for every trade, and from the get-go, you're setting yourself up for success, and from the get-go, you know, you understand what sort of decisions you're going to be making, you know, in case the stock does this, or in the case the stock does this other thing, okay? So again, profit from what you see, not what you want to see, okay? So if you see that there's a resistance, you know, at 75, even if you think the stock is going to 100, you know, sell at 75. Be consistent with your strategy, okay? Keep to the system, and trade what you see. If you see a resistance at 75, sell into that resistance, okay? Even if you think that the stock is going to 1,000,000, okay? All right, so specifically on entry level, guys, scale in. We have just seen, you know, in practical terms, the effect that scaling in can have on your risk reward ratios, okay? So important, so important. Scale in, scale in, scale in, always, okay? Be conservative. If you don't know, or if you have a question, you know, make the mistake on the conservative side. So what does that mean? You know, if you don't know if your first profit target is going to be at 75 or at 78, put it at 75, okay? If the stock is, you know, coming back down into your entry price, you know, get out even. You can always re-enter lower, but get out even, you know, even if you think that the thing is going to bounce and go into infinity, just get out even, be conservative, and be consistent. Okay, one of the things that we want is for our emotions to be cool. We want to be able to keep a cool head, and you know, starting small and having small positions is going to really you know, help us to do that. If you go out too big out the gate, you know, a 1% swing is gonna, you know, could send you into an emotional frenzy that is gonna you know, send you to start making emotional decisions that probably will not end up well, and that goes against, you know, everything that we've been talking about being systematic and being diligent. All right, so on profit targets, you want to sell fast at the beginning. Make sure to lock at least some profit, guys. Maybe you don't want to sell half, but at least sell a quarter of your position. That way, in case it comes back down, you can either get out even and you banked on a small part of your position, or you could give it a little bit of more room where the difference of that stop loss on, you know, on the position that you have remaining is taken care of by the gains that you took at the very beginning. You know, just giving your stock a little bit more room to develop the trade and actually, you know, take off if it's going to do that. So yeah, guys, you know, sell fast at the beginning, be ruthless, make sure to lock some profits in, at least some profits, okay? Not half, maybe a quarter, at least an eighth as you go along, okay? And yeah, make the profit targets congruent with your strategy, okay? So if you don't want to lose, let's say 5%, or if your max stop loss is down 5%, then don't aim for a 100% return, okay? Because for the stock to get to a 100% move to the upside, you know, it will more than likely require, you know, to make a more than 5% move to the downside before it can go up, okay? So make the profit targets congruent with your strategy. At the beginning I mentioned, you know, specifically for what we've gone over here today, we're looking for 10 to 30% gains, okay? And that's what we're looking for, and that's what we have found that is congruent, you know, with this type of strategy, okay? And now stop losses, just understand they're there to protect ourselves, okay? They are there to protect ourselves. And before you get into the trade, you know, you're looking at this with a cool head, and you're putting a stop loss to protect yourself. So stick to it, okay? There are different types of stop losses. I briefly mentioned that what we are doing in this type of system and with our members is that the stop loss go at a level, and then we're looking at a close of day on that level or below that level. So if our stop loss is, let's say it's $78, you know, we would get stopped out in case that stock closed the day below $78. So maybe it had an intraday move where it went below 78 and then came back up and closed the day, let's say at 79 or 80, you know, we wouldn't trigger our stop loss in that scenario, okay? Nevertheless, there are many different types of stop losses. I strongly encourage that you do a quick Google search, learn about them, experiment with them, and just, you know, understand which ones, you know, you like, go with your strategy and that fit your personality better, okay? You have, for example, stop market orders, where if a price, you know, touches or drops, you know, touches a price, your position will be liquidated in a market order. You have stop limit orders, where, you know, when the price goes down into a certain level, a limit order is triggered. You have trailing stop orders, where if it goes down X percentage, it's triggered, or X amount of dollars is triggered. Those are typically used to protect profits. But yeah, just do a quick Google search, learn about the different types, and start experimenting to see which one fits best with your personality and your strategy. Lastly, guys, there are no exceptions with our stop losses, okay? There are no exceptions. We never, ever, 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 ever take a loss bigger than what we set out at the beginning, okay? No exceptions on that. So, it's been dense, it's been long. We're towards the end of the presentation, guys. But, we've gone over what are some of the things that we're looking for when identifying the setup. So what are we looking for when finding the trade? We've gone over how to do some due diligence to increase our confidence in the trade. We looked at how to, create trade parameters. We worked through those examples. And now let's talk quickly about how to execute and manage a trade, all right? Number one, most important thing, as always, scale into the trade. Make sure you are comfortable as the thing is developing, all right? Take profits faster at the beginning, partially at the very least, okay, guys? So sell a quarter, sell half, lock in some profits, and really, start to skew that risk-reward ratio even more in your favor as the trade is working out, okay? So move stop losses up, lock in profits, minimize downside, guys. Once our trade is a little bit positive, and absolutely once we're doing our first sale, okay, so once we're taking our first partial profits, at the very least, you move your stop losses in a way where that risk is taken care of by the profits of that first partial position. What that is going to do is just going to allow you a little bit more room than your entry level, but still guarantees that the entire trade becomes risk-free. And as you're scaling out and taking profits, it becomes easier to hold on longer to those last pieces, and sometimes you will get really wild runs, okay? That's where you make some big, huge percentage move on the last part of your trades. Keep in mind, guys, that you can always re-enter lower. So the worst thing that can happen, okay, is that we have a winning trade, and just because we have like so much conviction that we deviate from our strategy, that a winning trade can come down into our entry price and then go below it. Now we have had a winning trade become a losing trade. That is absolutely, the worst thing that we can do, and it's really gonna take a toll in your confidence, all right? So avoid that at all costs. If, the stock is up and it's sort of coming, up to a level where you could have already taken profits and then it's coming back down, get out even, guys. Get out even, and then you can always consider to re-enter, okay? So do not let gains become losses. Do not let gains become losses. All right. And, in big part, guys, I'm going over this and I'm telling you these things and I'm telling you do not let gains become losses, but I'm actually talking to myself, okay? So these are, conversations that I will have with myself even to this day. Eric, do not let gains become losses. Eric, stick to your strategy. Eric, stick to your parameters. You already have a plan. There's no need to start making decisions with the trade open. Just stick to your plan, okay? So, and I'm telling you about mistakes and things that, for example, that dangerous thought about leaving profits on the table. I'm talking about myself, guys, and I hope that some of you can relate, but yeah, that's what it is, okay? Chances are that we're all struggling with the same sorts of things, okay? So lastly, just some expert tips. Psychology, guys, is the most important thing. I don't care what anybody else tells you. I put a poll on Twitter in my account a couple of days ago where I asked, what's more important in trading? Finding a good setup or managing correctly an open trade? And I was happy to see that about 70% of the responses were that managing an open trade is the most important thing. And I agree with that, okay? And if your psychology is not in the right place, guys, you're not gonna be able to manage the trade correctly. So, what are some of the things that you can actually do to make sure that your head is in the game and that your psychology is top notch and that you are in a position to keep with your strategy, to make decisions in a systematic manner and become emotionless, okay? One of the things that you can do is research well, all right? Make sure that you know why you are taking the trade that you are taking. Make sure you know why you're buying and you're selling into the levels that you are buying and selling into. And just make sure you know the company, you understand the competitive environment it is operating in, and just that you have a really good grasp in the general context of the trade. Okay, that's going to give you confidence when you read a scary headline. Oh, is X or Y managing their debt correctly? It's not going to phase you, and you're going to still be able to stick with your strategy. Okay, have a worst case scenario. Understand what is your worst case scenario. If you know that your worst case scenario is that you're going to lose $100 and you're okay with that, then there is no reason, when the trade is open, to become nervous, okay? Because you already know that the worst thing that can happen is you lose $100 and you're already okay with it from the get-go, okay? Scale in. Again, guys, scale in, because you want to have room to decide if the stock price drops a little bit more after your entry. You want to have that flexibility to be able to finish adding to your position and get a better price, okay? Scale in. It also gives you time to see how the trade is working out, and just gives you that time to build the confidence that you need to really be systematic and emotionless. So scale in. Keep it small. If you need, keep smaller positions. It's easier to see swings on a position of $20 than to see swings if you're putting in $1,000 and the thing is moving $100 every day. Okay, so keep it small, keep it manageable, and overall, guys, just understand your trade, understand the company, understand the stock, understand the story, and really just understand what experts are doing, what the retail base is saying about your stock, how it's behaved in the past, what corporate is telling investors, and the lot. Okay, just understand your trade. Okay. And then lastly, guys, meditate. If you need to take a breather, stop trading, don't overtrade, step outside, do leisure activities, talk with somebody that, can help you to keep calm, do whatever it is that you need to do to keep your emotions in check and your mental state balanced, okay? So, at the very beginning, I told you I was going to go through lots of examples. We looked at past examples. Now, the last thing I want to do is to look at actual trades that we took with our members. Here's our dashboard. Here are some of the alerts that we've sent. And let's just jump right into it, okay? So we're looking at Twitter right now. So as you can see, boom, big drop into the 200 MA, big volume. We sent out an alert Tuesday, May 18th. Guys, we're buying shares of Twitter at 53 for a swing or long-term hold. And again, going back to keeping your strategy congruent, we're buying this. We bought this for two of our portfolios, okay? For the swing and for the long-term portfolio as well, okay? So, but for this case specifically, we're going to look at the swing trade, okay? So we bought here, May 18th, 200 MA setup. It sort of broke down after earnings on big volume. And then it confirmed to us that, hey, this is a level that maybe, I do want to hold. So we went ahead and took a chance, okay? Oh yeah, and stop targets. We will exit the trade if the stock price closes the day below 49, okay? So 49 was around, just under here. So we bought here. If it closed the day under here, then we would have gone out, okay? Anyway. Thank God we got a little bounce here. So on Tuesday, May 25th, we sent another alert to sell half our position for 10% gain. Eric, 10% is not a lot, but the thing is, for this strategy, guys, that's exactly what we're looking for, okay? And then also, these are so liquid. These are such big companies, so liquid. They're trading millions and millions of shares every day that you can, in theory, go in with whatever size you want. Okay, so that 10% can be 10% of a $100,000 position if you want. And the liquidity in the stock allows for that. Okay, so yeah. Anyway, thank God the thing sort of pulled back a little bit, but then went up again, and it touched the 50 MA, and we sent another alert. Okay, so now we're selling half of our remaining position to about 14% gain. Okay, so now things start to become a little bit more interesting. All right, so we sold for 14% gain, and we moved the stops on the remaining of our position to 55. So we bought at 53, we sold here for 10%, we sold here for 14%, and by now our stops, okay, are $2 above our entry price. So in the worst case scenario, this thing collapses now, we are going to get stopped out on profits in the remaining of our position. Okay, so we've just essentially guaranteed that our trade on the remaining position is profitable no matter what. Okay, so now it's easy to hold this, and I'll be able to, go fishing, whatever, and not be thinking about this position, because now I know that my worst case scenario is a 5% profit, okay, or a little bit percent profit, or whatever it is, okay. Then lastly, this thing continued upward very strongly, and finally on June 23rd we sent an alert to sell or close last 1/4 of our position for a near 25% gain. Very nice, and it was sold somewhere around here. Okay, very cool trade. Now we're going to look at PayPal. Again, guys, solid company, general uptrend in the stock price. It was trading up here, and then all of a sudden, boom, big pullback to around this level. And it's so close to the 200 MA that we went ahead and we sent out the alert. Again, guys, as I mentioned at the beginning, when you translate these concepts into real life, they're not going to be super clean cut, as maybe you're seeing here, and you're going to have to use a little bit of your criteria, to develop the trade parameters and execute in a way that makes sense. Okay, and that's really what we want. We want you guys to take away from this a framework, okay, that you can apply to your own personalities, to your own tolerances, to the own companies that you like. Because maybe you don't like PayPal, you like Square better, okay? That's fine. You can apply this same system to Square if that's a company that you like, okay? And that's what we're looking for. All right, so we had a pullback here. We had, it's a combination between a notable price level and a 200 MA pullback, okay? But notice this, we bought half position at 233, okay? So we don't know if it's gonna finish coming down to a 200 or into this level. So we bought half, and we'll buy the next half in case the stock falls 215. So just as we saw before, we're scaling in, buying in partially, making sure that the risk-reward ratio is always skewed in our favor from the get-go, okay? We want to set ourselves up for success from the beginning. All right, so then on Friday, May 21st, so a couple of days later, all right, this thing had a big bounce, and we sent an alert to close half the position for 9% profit, okay? Also in this email, I didn't include it here, but we also had another text to move the stop up to entry, okay? Guaranteeing that the rest of the trade became risk-free. So we're selling half position for 9% gain. We have our stops to entry in the rest of our position. So in case this thing collapses, we get stopped out even in the rest of our trade, and you can consider that in your total trade, you just booked a 4.5% profit, okay? Because 9% profit on half of your position is about a 4.5% profit on your total trade. And that's fine, guys, that's fine, okay? In this particular case, the trade actually worked nicely, and the thing continued up, all right? And a couple of weeks later, we were able to send another alert where we're selling, the remaining half, or not the remaining half of our remaining position for a 17% return, all right? This 17% return on a stock, that's interesting, okay? We like that. That's a really good, nice, solid double, okay? And then lastly, on June 24th, so about 10 days later, we sold our last 1/4 position for a 26% gain. That's super, super nice. So this trade worked out perfectly, except for the fact that we were in only half position. But since our system, is contemplating this, we are happy. This was a perfect trade, in relation to this particular system. Would somebody that had another system maybe bought full position here and maybe not sold here, but sold full position here and locked in more gains than we would have? Yes, but that would have been another system with other criteria that I don't know, how risky it is or how applicable you can do it to over and over again. But for our case, our intents and our purposes, this is what we were looking for. Scaling out of our position, looking for anywhere between 10 and 30% gains, okay? Let's look at another example here, okay? This is the last one that we're gonna look at. And this is Qualcomm, all right? So we sent an alert to our members right here to buy, okay? Bought shares of Qualcomm at 133 and stops. We will exit the trade if the stock price closes the day below 119. Really tight stops, consider a close at 128. Okay, so I want to bring your attention here 1 second. So we bought at 133 and we have our stop losses at 119. Why? Because we see that there's a double bottom here, and a sort of, it was the roof here, sort of confirmed here, bottom here, bottom here. There's a possibility that this thing, falls down into that bottom and then bounces, okay? Or let me say it like this, that falls into that bottom before it is able to bounce, okay? And we keep that in consideration. And even though we're buying a 50 MA and 200 MA setup, because this is so close, we're going to consider the stop level on a multiple bottom setup, okay? And that's what we did. That's why we had it at 119. Nevertheless, if you're only considering the 50 and 200 MA setup, then maybe a 128 stop would have been okay, because it would have been a really tight risk. And in case this thing dropped down from here, then you're no longer considering the 200 MA, and you would have let it finish dropping down and considered getting back in, let's say at this double bottom, okay? And look at what happened. The thing actually dropped, okay? It actually dropped, okay? Very close to our stop loss. So it dropped to about 123, but it didn't hit our stop loss, okay? So here, you would have gone stop out, let's say at 128, if you would have taken this one. And by the time it reached this bottom, it's already offering you another setup of a multiple bottom to buy into. So you just basically saved yourself this drop of $5, okay? So that's what we're talking about. Okay, so if it drops below 128, then I want nothing to do with it. I'm gonna let it finish breaking down, doing what it needs to do, and then I'm gonna consider getting back in the future. And this would have been, one of those cases. All right. Then, anyway, so just for the sake of going through the trade, we bought here actually, and we held. Also, again, I mentioned we're looking at a time frame of weeks up to a couple of months. And in this case, we had to hold our position. Look at this. We sent our first alert on May 6th to buy here, and then it dropped. And then it took a while to recover and actually continue trending upward. So we had to wait about 2 months before we could sell the first part of our position for a mere 7% gain. Some of you are thinking, Eric, 2 months for a 7% gain, that's ridiculous. It's not ridiculous, guys. It is congruent with the system. Okay, that's what we're looking for. 10, 30% gains, holding about, a couple of weeks up to a couple of months. So given this, I will gladly take a 7% gain on half my position, and then leave the second half of my position to be risk-free. At minimum, at this point, I've just guaranteed about a 3.5% return on my entire position in the worst case scenario. All right? So, and we do this, guys, because we don't know if this is going to continue up or turn down. We don't know. And we want to be able, to apply this systematically over and over and over again. Okay? So, yeah. Then on 7/29, so July 29th, about a month after, we were able to send another alert up here to sell a quarter of our position for 13.3% gains. So now this is interesting. Okay, and check what happened afterwards. The thing started to retrace, and actually an article came out right up around here that Google was no longer going to be using Qualcomm processors for their smartphones. Okay, so we actually send out an alert to, hey, just close the position at a 12% gain by this time. Okay, so notice that this sell was lower than this one, but that's okay. And since this is a swing position, guys, we don't want to hold and see what's gonna happen with Google and Qualcomm, and what's gonna happen to the stock price. By this moment, this is a swing trade. I'm looking for 10 to 30% gains, and I don't want to be part of this drama, so I just went ahead and booked my profits and got out. Okay? If I were investing in Qualcomm, maybe I would have just let it drop and bought in at a lower price, because this bad news offered me an opportunity, and I still believe that the company is going to be successful long term and whatever, and would have offered me an opportunity to add into my position, for a longer time frame, or for an investment or whatever, which would have been, let's say, congruent with that strategy. Okay, for this specific case, all right, we don't want to deal with this. We're just taking our 12% gains and we're moving on. All right. Then this is the last one that I'm going to go over. AMD again. We see this chart a couple of times throughout the presentation. So check it out here. It goes up, comes down into this bottom, into this bottom, into this bottom, into this bottom, and then right around here we send our alert. To be 100% honest with you guys, I wish we would have sent the alert down here. It was perfect. The entry level was perfect, but we're not perfect, so we caught it a little bit late, a couple of days late, but still worked out fine. So we go in at May 25th. We enter our position. Buy zone $78 or better. Stop loss $73.83. So very specific. $73.83 is about a breakdown of this level. All right. So on 6/17, a couple of weeks later, boom, this thing trends upward and hits the 200 MA. All right. We send an alert to sell half position for a 6% gain. This actually should say 84, big typo, because this was 84. But yeah, so 6% gain, okay, on half our position. So we're locking in some profits, all right? We don't know if it's just gonna come back down or if it's gonna continue up or what it's gonna do. So we wanna lock in profits. All right, guys, then a couple of days later, we sold half remaining position, so half of the remaining position for a 12% gain. So first we sold 6%, now we're selling for 12% gains, okay? Now it starts to become interesting, all right? And then on July 1st, we had another push, boom, and we were able to sell or close the last quarter of our position for a 21% gain, okay? And check this out. It pulled back into the 200 MA. There was another setup here to be honest, we didn't take it. We completely missed it, but the thing just took off, okay? So this would have been an obvious entry. So this would have been a case, you know, where if you're looking at AMD, this is a company that you like, you have it in your watch list, and you have this system in place, you know, once you're out of this trade, you know, this retrace would have offered you another opportunity to buy in, okay? So I hope that you can see that, guys. Anyway, so just to tell you a little bit of who we are, Psycho Trader, you know, we're offering a bunch of things on our website, lots of which we didn't even touch upon today, like the daily gappers watch list and whatnot, and the weekly newsletter and the daily recap. But what I really want to emphasize, guys, is that we have a very robust free membership, okay? And this presentation that you saw today, this swing trading system, the due diligence system, and all these other resources, they are going to be included in this free membership, okay? So it's not in the premium. All this that we've gone over today is in the free membership, okay? We really made a big effort to create a robust offering, okay, guys, in terms of resources and guides that you can access to help you in this journey, okay? And this is all free. You can download. These are PDF documents. Take them with you. Do with them whatever you want, all right? So the free membership is going to give you access to basic access to the dashboard, to a daily recap that we send out every day, and to these trading guides, okay? So this, the one that we've just gone over for the swing trading, is one of these trading guides. And then we also have educational articles and FAQs. So what is included in the pro membership that is not here will be things like, you know, live alerts, our watch lists, you know, access to our portfolios in real time, and the weekly newsletter, okay? Because if you see, the daily recap is included in the free one. All right? So I said at the beginning, guys, we had a little gift for those of you who really wanted to take your trading to the next level, and this is it. We're offering 50% off on the yearly subscription with the code SY50. So if you were in to go to our website, you were interested in purchasing the premium membership, you type in this code for the yearly subscription and you're going to get 50% off. All right. And then also, guys, feel free to check us out in any of our social media. I would say, you know, take a look at our Twitter. We're posting ideas and setups there on a constant basis. So we encourage you to check out any of these outlets. All right, last thing. Some of you are still skeptical. Some of you are saying, okay, Eric, so you showed me all these setups, you showed me the trades, and you showed me these charts where, like, you know, if you were going to take a trade today, you know, what sort of parameters you would look. But, you know, I'm watching this 6 months, a year into the future, and none of the charts that you have showed me here today are relevant, okay? I'm interested in the system. I want to start applying. Where can I actually go and find these stocks? You know, I don't know how to do the work or do the research and, you know, narrow down these setups. And guys, I'm just going to show you quickly, you know, one example of what you can do, okay? This is our website. This is our main homepage, psychotrader.com, right? You go to our dashboard. So this is where you were, daily recap, resources. This is where you had the ultimate swing trading guide. But, you know, going back to your point, where do we find these setups in the future? If you're looking at this a year into the future, where can I go to start looking at these setups and putting this system into practice? Check this out, guys. You go here to newsletters and watch list. You have our master watch list and our stocks under 30 watch list, okay? So for example, if we go here, master watch list, we have Pinterest. Look at this, boom, multiple bottom, okay? With a little explanation, when we add it, when the explanation has been updated or the chart has been updated. You know, Twilio, boom, pull back into the 50 MA, 200 MA, or you can even set an alert here for a notable price level, okay? Amazon, boom, pull back into the 200 MA. Penn, National Gaming, boom, pull back into a notable price level, okay? GRWG, pull back into the 50 MA and into the 200 MA, and very close to a notable price level. Okay, so you see, guys, by the time you're watching this, we are still doing this. Our watch lists are still updated, so you can feel free, you know. Again, to top it all off, we have a 2-week, you know, free trial on our premium membership that you can, you know, go ahead, try it out for 2 weeks. Or if you want, you know, just go in for a day, look at our watch list, and then cancel the membership if you want. I don't care. All that I do care, guys, is that you take value out of this and that, you know, everybody grows together. And that's really the idea here. And, you know, yeah, we have a premium subscription, you know, that we sell and whatever. But, you know, if we are adding value, you know, it's fine. And if not, then we have a bunch of free stuff that you guys should feel free as well to go and check out. So anyway, guys, that's it for today. I know it was long, it was dense, and I'm very happy that you guys have stuck with me towards the end. There's really not much more than I can add at this point. So again, just behalf of myself and of the team, wanted to thank you guys. We are really grateful for you. We are doing this for you. We want to see you guys succeed, and we hope to see you in there at some point. And if not, all the best to you guys, and here's to your success. Cheers.